Hey, everybody. With us once again is Mark Collinsworth, the CIO of Vere Global Financial Wealth Management, to talk about the latest increase in interest rates by the Fed after pausing it the last time around, about a month or so ago. This time on Wednesday of this week, they raised it again, 0.25%, 25 basis points. So, Mark, what does that mean? Why did they do it, and what's ahead because of it?
Hey, Larry. So the Fed's goal is to get inflation down to 2%. Inflation is running about 5.5%, targets 2%. To get the inflation down to 2%, you're going to have to keep raising interest rates to make the economy slow. But the economy's not slowing. To give you an example, GDP numbers came out today and they were forecast to come in at 1.8, and I think they came in like at 2.4, showing that the economy is actually picking up steam even after a 500 basis point increase in interest rates.
So it would appear that for the next several increments now, there's going to be more increases.
Correct. And that's what's got the stock market worried, or at least has it worried today. But the stock market has been going up. And I think the reason why the stock market's been going up is the Fed opened up what's called the emergency discount window back here in March. That's when we had the Silicon Valley stuff. And the emergency discount window is basically was an emergency backstop for banks that were in financial distress because the higher interest rates are killing banks' balance sheets. They opened up a special entity that banks can go and borrow money from. So since they opened up that special window or emergency lending window, banks have borrowed $600 billion.
Hmm.
So even though the Fed's raising interest rates, there's $600 billion going through the into the back door of the U.S. economy, and the Fed is taking out less money through the front door by raising interest rates.
So, I mean, what's ahead by the end of the year? Will they get the economy to slow, or will it still be a struggle and inflation they'll keep raising interest rates and more inflation?
I think the Fed's going to keep raising interest rates because look at it this way: if the economy is doing really well, keep raising interest rates because when you do run into a problem down the road and do have a recession, the higher the interest rates are, the more you can cut them, and the more you can cut them is more beneficial to pull the economy out of recession when it occurs.
Yeah. The Biden administration has been touting Bidenomics, as that's a good, successful approach to the economy. Now, so far, it hasn't been working, but are they thinking that by election time, Bidenomics actually will turn around the economy, and therefore it'll be a winning campaign slogan?
I don't think so. Just look at the different like models that I kind of look at. I really think by the time you get into the first quarter of next year, you're actually going to be in a recession. Now, when you use the word recession, there's two kinds of recessions. There's the recessions like we had in '08, the recession we had like in '84, the recession we had like 1980, 81. Those are pretty bad recessions, but your recessions like your dot-com bubble and your 1990 recession aren't that bad. I think you might have a recession like 1990 or the dot-com bubble, and that's fine. But if you have next year, which is election year, you have something like '08, it will kill the Democratic Party trying to get reelected.
Hmm. Now, again, just reviewing what we've been talking about, with this increase in interest rates this week and probably more to come by the end of the year, will the market stay vigorous or will it start sliding down and towards a recession, or there'll be a bump and then early next year we'll be into a recession? How will that work?
Well, I kind of think you're going to have this kind of thing. I think come next year, going into an election year, Fed is trying to make their mandate that they don't want to raise interest rates in an election year. When George Bush Sr. was up for reelection, the Fed raised interest rates during an election year, and a lot of people blame the Fed for causing George Bush Sr. to lose his reelection bid against Bill Clinton.
Right.
So the Fed has kind of made it a priority not to raise rates in election years for that reason. So that's going to help the stock market out a lot next year, I believe, for the election. But again, um, the Fed's really kind of concerned about inflation. I think inflation is going to come down, but problem with the stock market is the stock market's being driven by seven stocks. You take the seven stocks like your Nvidia, your Apples, and you back them out of the stock market. Stock market's really only up about 3% on the year versus actually being up like 17%.
All right, so therefore, let's see if I got this straight. Between now and the end of the year, the market is going to be up or down?
Think it's going to go up because the backstop window. Even this week, like during Jeremy Powell's speech yesterday, he says we really want banks and we're encouraging them to keep on borrowing money from a discount window. Well, that means money's going into the economy. These banks are getting free loans. They're not paying interest on that emergency backstop. That's free money to them. Why wouldn't you borrow $600 billion interest free?
Mm-hmm. Okay, so between now and the end of the year, the market's going to be up. And then next year, what happens? Election year.
Well, for this year, September will probably be a down month just simply because September historically is the worst performing month of the year. So I think that'll be down. But next year, next year being an election year, this is kind of the weird thing about election years is politicians absolutely do not want to rock the boat in election years. Stock market knows that. Stock market knows the Federal Reserve really tries to avoid raising interest rates in an election year. So with that occurring, and it's very rare to see election years like 2008 was an election year, but the stock market is down. That's very rare. I mean, that's extremely rare. So with the Fed not raising interest rates next year and politicians not putting their foots in their mouth, I think next year will probably be an up year for the stock market.
All right, so next year too, it's going to be up.
Yeah.
So therefore, won't the public perception be that Biden is right, that his Bidenomics is working?
It's not Bidenomics working. The best thing that happened for the Biden administration was Silicon Valley Bank went under and the Fed opened up an emergency backstop window, which is now flooding the banks with free money.
But yet, won't the public perceive
You're
that
correct, they will. But
Bidenomics is improving the economy?
when you look at why presidents get elected or don't get reelected, it's not the economy is only if you look at what's called the 13 keys to the White House, the economy only makes up like two components of the 13 things. Um, Biden's old. He's really not firing on all cylinders. Like last week, he said that he had ended cancer. Cancer no longer exists. Wow, that's news to me. I mean, did you see that? You saw that, didn't you, Larry?
Yeah. Yeah.
Cancer no longer exists. So he's just old.
So therefore, in terms of Bidenomics and whether the public is going to find that have the winning formula, I mean, how's it going to turn out?
Well, that's the thing also with Bidenomics. You look back at the 13 keys of the White House, the two main things is the two economic variables is the economy in a recession, yes or no? And the other variable is has your per capita uh, your real per capita growth has it been positive or negative? Right now, that's a negative number. So that's actually a strike against them. If they can't get inflation down, that's actually going to be a negative against Joe Biden next year.
But you're saying the stock market will be up next year. So people,
Yes, but the stock market, yeah, yes, but the stock market has nothing to do with the actual has nothing to do with the actual election. You have to look at those 13 variables, and of those 13 variables, they're going against Joe Biden, not for him.
okay, well, let me ask it this way. Even though the stock market will be up next year, will people still feel the effects of inflation when they go to the grocery store, when they gas up the
Yes,
car, when they pay their credit card bill, their
correct,
mortgage,
correct.
et cetera, et cetera?
Correct, they will. And what's also interesting about the stock market, and they've done studies on this, if you take the performance of the stock market from September 1st through election day, if the stock market's negative, no president's been reelected with a negative stock market return from September 1st to the election. Every president that's been reelected has seen a positive return in the stock market from September 1st to election day, which if you'd followed that model, it actually predicted that Donald Trump would actually lose his reelection because the stock market was actually, even though the stock market was up as a whole, it was negative from September 1st until election day, if that made sense.
Well, but in terms of Biden, if the stock market is up, that would indicate that he might get reelected.
No, no, it depends if the stock market's up between September 1st and election day. Because if you look back at this is kind of the interesting thing is you've had election years where the stock market has been positive on the year and has been positive all the way up till September 1st. And then after September 1st, the stock market would go down and the president would lose reelection. 2000 and the Donald Trump election back here 2 years ago was a perfect example, or 4 years ago.
All right, so what do you predict? What's going to happen?
I think I'm going to say that probably because you have the Democrats are trying to get rid of Joe Biden. That says a lot right there. And because he's just too old. I mean, the stuff he says just doesn't make sense. And when you have your own party trying to put people in place to get him out, and then of course you have other people like Kennedy. A lot of Democrats like Kennedy, a lot of Republicans like Kennedy, but the Democratic Party is trying to make sure Kennedy doesn't get in. And I think the main reason behind that is because he's actually connected to reality. The reason why they want Joe Biden in is you walk in there and tell Joe Biden, hey, can you sign a piece of paper to give, the Boy Scouts $1 billion? And he's like, sure, I love Boy Scouts. Let's go out and have some and buy some brownies. The Boy Scouts are selling brownies down there. I love it when the brownies wear the little brown suits and they stand there in their skirts and everything, and they sell the popcorn there with the brownies and everything. They're fantastic. Gotta love the Boy Scouts. Oh, did I tell you I was the first Eagle Scout that ever existed in the United States? I was the first Eagle Scout elected in 1888. I actually shook hands with President Lincoln 20 years after he's assassinated. What do you think about that, people? Let me tell you about my swimming career.
You should do a stand-up routine imitating Biden. That's pretty good.
I should.
Yeah. Okay. So, therefore, wrapping it up, your prediction both of the stock market, the economy in general, and the election next year is what?
I think you'll see the economy slow next year due to the interest rates from this year. But the economy will slow enough that will stop the Fed from raising interest rates, which will be a positive for the stock market. And you'll see a higher stock market next year, which is usually the norm. Stock market historically does about a 10% return in election years.
But the effects of inflation next year, despite the
I think inflation's probably topped out. I don't think you'll see inflation go up from here. I don't think inflation is going to go to 2%. I think probably for next year, you're probably looking at inflation being a little bit below 5%.
So, but will people still be hurting, still feeling the pain of inflation?
Well, they've actually been feeling the pain. The CPI numbers they measure the inflation rate by, those numbers have been tricked out for years. So the inflation rate's always been higher. And the reason why the government tricks the CPI numbers out is so that Social Security COLA adjustments, cost of living adjustments, Social Security don't go up as much. So they always try to gear the numbers to be as low as possible.
All right, but realistically, will people still be feeling distressed about the economy, about paying their bills?
Correct, they will. And that's why I'm predicting. I don't think Joe Biden will win re-election next year.
Okay, we'll see. Mark Collinsworth, CIO of Vere Global Wealth Management. Thanks once again for your analogy and your analysis and your words of wisdom. See you soon.
And thank you, Larry. As always, it's always the darkest before it gets really freaking bad.
You're closing words again. Okay, Mark, thanks.
You're welcome.